Good morning, Checkmate crew. Today is Tuesday, October 11th, 2022. It is 9:30 a.m. New York Stock Exchange. This market just opened. Let's dive right into it. Okay, so we're right now at the lower end of our trading range here. On Friday, we saw a sell-off after the jobs report came out. Lower market participation, the job market a little bit stronger than what was expected. So, of course, you know, the markets or the media said that was good news is bad news. And so it sold off. And yes, it was market participation. I mean, that's a definite one of the biggest inflation pushers right now is wages. And so if the supply of labor just keeps going down, then of course, that means the costs are going to remain high. And so, yes, the market is not taking that very well. It still hasn't gone below the lows, though, from last week. So we'll see. We'll see what happens, okay? My plans still haven't changed. I'm still waiting for higher levels to short. And if we get an undercut, remember back in June or July, in one of the high noon highlights, I said that if we see a weekly wick, all right, we might see, because there's a lot of options here, and then if there's a panic and when they have to cover those short puts, if those that are short puts right here panic, weakness begets more weakness, and we could see an undercut into 3,400 really quickly and then recover. And if we see that weekly wick, I said, then that probably means this is a bottom, because these are valuation levels right here, okay? This would be like, I believe it was like 14 times forward earnings, but all of these have certain earnings multiples attached to it. So yeah, we could see if that shows a weekly candle wick down and then recovery in the same week, that would mean that the institutions are seeing this as a value area. All right. And if it touches there, of course, I'm going to be buying shares. I'm just going to be buying shares outright. I already have short puts from 366 that I got paid $13 per contract for, or 13, yeah, per 100 shares. So that, I think, if we get there, I'm not selling puts here. I'm just going to be buying shares for my long-term account. And then, of course, if we don't get there and we rise first and our liquidity data doesn't change, of course, all right, as planned, I will short here via long puts. That hasn't changed for me, okay? I do have some lottos right now, I think. I think they filled, yeah, yesterday. So they're a little bit underwater. We'll see, okay? Small lottos. This is a hedge for mostly the UUUU position, which actually is coming down now finally. So UUUU is finally coming down, so maybe our hedges will pay off. But this is my hedge, and then my hedge for my hedge is the TLT long and the UVXY puts that I have. A little bit underwater. But these positions get smaller and smaller because they're just hedges of hedges. And then I even have a hedge for these positions, which is the SPY spreads that I just shown you. Again, even smaller position, because this is just a hedge of a hedge of a hedge. Okay, so a little bit of portfolio construction there. And I'll go over more portfolio construction in later episodes. Maybe in an educational episode, I'll make portfolio construction and how to use different spreads, with different correlations, so that you don't get wiped out. If the market moves really heavily in one direction or the other, I'll go over stuff like that in later episodes. Okay. There's been a lot of requests to look at other stocks in other parts of the world. So today we are going to take a little bit of a global approach and look at some stocks overseas, because I do think that there's some opportunities brewing overseas. We have talked about emerging market risk and solvency risk. Actually, a lot of the solvency risk right now is in what we traditionally called developed markets, which are, United Kingdom and Japan right now are having some issues with their currency. Let's actually start with Japan. Okay, so Japanese yen right now is selling off yet again. All right. This chart, USD JPY going up, means Japanese yen is coming down in relation to the dollar. Okay, so remember how we had that trade order we were thinking about doing right here? Well, I canceled it. Okay, I canceled it, and here's why. Prime Minister Kishida came out, and he basically supported the Bank of Japan and their loose monetary, the loose monetary conditions that they're putting on over there. They're doing bond buying, unlimited bond buying. They're putting a cap on interest rates. Honestly, I don't think they can afford the interest rate to go up any higher, even though they're at rock bottom and almost zero. And so we are seeing literally the Japanese yen running away. Okay, it is literally running away. And so in the face of all of that, and in the face of the prime minister still supportive of that loose monetary policy, I don't think I'm gonna risk it and go long the Japanese yen. Okay, I'm just not gonna risk it. The dollar is a wrecking ball, and right now it is taking its a hold on the Japanese yen. Also, too, the Bank of England. The Bank of England has to increase its bond buying program. That is not ideal for them. I mean, their inflation is still quite high, and now they're loosening. So we'll see what happens to England. But at least today it looks like the pound sterling is up against the dollar. However, for Japan, back to Japan, their yen going down this fast imports a lot of inflation. Okay, and so if you look at the Japanese market, the Nikkei, these are the Nikkei futures. You can actually trade this yourself. You can, and I know a lot of people who make very good money trading this. It responds very well to levels, especially you guys who are chartists. I think you guys will really like trading the Nikkei. I think I've made like maybe 2 Nikkei trades ever. 2. All right, they're years ago. So yeah, I generally don't trade this, but it does respond to levels quite well. If the Nikkei, I think at some point Japan is going to have to intervene yet again in their currency. They probably also need the Federal Reserve to intervene as well. All right, and I think if they don't, let's say the Fed doesn't pivot at all. Okay, let's say it doesn't pivot, and let's say they actually get more hawkish, which is possible. Okay, let's say the next few inflation data just comes out really bad, that's worse and worse and worse. I don't, it's very possible that the Fed may not even pivot. I don't think so. Personally, I'm leaning more toward the fact that they will before the end of the year, but who knows? Okay, I can't tell the future, and trying to bet on what the central banks are going to do is a fool's game. So I'm not going to be betting good money on that. But let's just try to anticipate what could happen. Let's say they don't get dovish, they don't pivot, they get more hawkish. I can definitely see the Nikkei coming down and retesting some of these levels from below here. These levels go back a long time, actually. I think they go back months. I mean, are years, I think. I think it goes back even further. I think these are the levels that are on the charts from the 80s. I don't know why TOS. Well, I'll take a look at my other charts that I have, and I'll show you guys this tomorrow in tomorrow's episode too. But yeah, this level goes back years, okay, or decades. And so I think if we see, the Fed get more hawkish, we could see Nikkei coming down to these levels. So some of you guys that have futures trading enabled, you guys can test this out and do a paper trade on this. I'm not going to be taking that trade unless we really get down into this edge. If we get down here, and let's say liquidity data improves while it gets down here, I may take a long at it. But risk management will be very tight, okay? But not at this level. This top right here, that's around 24,200. No, I really want that 22,700 zone. I really want it to undercut. And that's where I may attempt a long right here, okay? But I think that's months and months away, all right? China. Here in the United States, the best way to play China, I think actually one of the only ways, if you just want to do something like that's tracked to an index, is FXI ETF. I don't know of any futures, or at least on Thinkorswim, I don't know of any a futures contract we could use for this. But this is probably the best way. Charting this is seemingly impossible just because there's so many gaps, and it's because their markets are open when ours is closed. So for FXI, I usually like to look at the weekly chart. Remember we had those shorts and I got out way too early. So also China, a lot of their big real estate property developers have their debt denominated in dollars. So guess what? If you're an evergreen right now, whatever your debt was back in earlier this year, your debt is pretty much like 20% more expensive. The yuan has fallen about 20 or 30% in the last year or so. Again, if your debt is priced in dollars and dollars are now 20, 30% more expensive, well, your debt payments have just gone up that much. And right now in the emerging market world, there's a lot of debt payments due mid to end 2023. And that's when I think the real problem will start. This, I don't think this is just, I think just, and first of all, EEM is mostly China. It's mostly China, Hong Kong, South Korea, Taiwan, countries like that. It's heavily like East Asia, all right? I'm not just looking at East Asia, but just around the world, Latin America, Middle East, all these emerging market countries that have dollar denominated debt. I think the real pain is not the real pain, okay? This is orderly selling just because, the US stock market and global stock markets are just selling off because of tighter monetary policy around the world, higher interest rates, whatever you want to call it. But this is not what I'm looking for a meltdown, okay? A real meltdown, all right? A real meltdown would be something like this, like 2008 style. I think that's a ways away, 2023, 2024. If we see a bull market rally, in 2023 that lasts like 9 to 10 months, which is possible, in past bear markets, we've had periods of bull market runs that lasted for months. We could, and if that's the case, if some of these emerging market countries come up, I definitely want to be shorting. One of the targets that I'm actually looking at is Turkey. All right, Turkey has 80+% inflation right now. All right, yet their central bank is cutting interest rates, and so every time it cuts interest rates, the market spikes like that. It's their market, okay? But I mentioned that I wanted to short when we get to these levels. The only thing that's really stopping me from this is if you look at the weekly and monthly charts, it kind of looks like it may want to break out, actually. It looks like it back tested this trend line. That goes all the way back, by the way, to 2011, 2013. So this is not some trend, this is the monthly chart, guys. Monthly chart, okay? So this is not some I'm looking at a 4-hour chart. No, monthlies, okay? So this goes back 2010, 2013 or so, and this has pretty much track the market. And look, now it's just breaking out. Do we get a, okay, so markets can stay irrational longer than you and I can stay solvent, okay? We know that this is not a sustainable, environment in Turkey where you have 83+% inflation and you're going to be cutting interest rates, okay? That economy is probably going to implode on itself probably later next year, okay? But that doesn't mean it can't go up, all right? Definitely, if it gets to like 45, I mean, that's like, I will short this thing like both fists at 45, okay? Is it possible we get there? It could. If we have this like global bear market rally that lasts 9-10 months, it definitely is possible. So I'm going to be watching this, but I don't want to be hasty on this. The Turkish stock market is really small, so it really doesn't take much to move it. All right. So I'm not going to risk it at these lower levels. I think I'm going to wait till it gets around 45 and then short really hard. Another reason why I don't want to be all hasty about Turkey is because the TUR ETF is just not that. It's just not that deep. Okay, it's just not. Oh well, today was a couple thousand. Okay, so yesterday it was a little bit less volume than this, I think. But still, it's not that much compared to like a SPY or something. It's really not that much. We have been, at least I have been noticing a lot of long-dated put buying already, though. And in the thousands. Like these orders are in the thousands at a time. Okay, so I think there's like a few institutions or maybe a few large traders already planning some maybe entry positions to them. Okay, so these are like a couple thousand contracts at a few $100s a piece. So they're like, a couple $100,000 trades. It's not that big, but it's not small for an ETF like this. And especially whoever's doing that probably knows that the liquidity is low. So they're probably willing to hold it. All right. So I'm already starting to see that some large traders are putting in some long-term options trades already on TUR. We'll see. I think it's a little bit too early, though. I think we might see a little bit of a breakout first. We'll see. We'll see. Okay. Some of you wanted to see the other exchanges. I like to look at Europe, too. Europe, we've got a plan for Europe. I'll look at Europe first, and then we'll look at the DAX. I know someone specifically asked for the DAX, but Europe, I think, Euro stocks, I think it's a great short if it can get up to these levels right here, all right, around 3,700 or so. If it can get to like 3,700, 3,750 zone, I'm willing to short. Now, I'm going to use FEZ. That's the European ETF. The Euro Stoxx ETF. And the reason I don't want to use futures in this is if I'm wrong, I don't want undefined risk. So if you use futures, that's undefined risk. Your risk could be potentially unlimited, if you don't put stops or whatnot. I don't like using stops as a form of risk management. I like to use option spreads. And so I want to do a risk-defined put vertical debit. So I'm going to be doing that when the Euro Stoxx index gets to 3,700. But right now, Europe, they're praying for a mild winter right now. Supposedly, they have enough gas reserves, and if it is a mild winter, they'll still have about 20 to 30% in reserves left over. Or that's what was the most recent report. We'll see. I think there's a lot of uncertainty, and that's why you're seeing people hesitant going long the euro. The euro right now is below parity, 97. It takes 97 cents now for a euro. And so that is, if it keeps going down, that is a signal that there's probably more pain ahead. Right now, I consider Euro USD to be a risk-on signal. All right. And probably when it goes up, it'll probably be around the time when the Euro Stoxx index goes up too. The DAX is also very much correlated. I mean, I think I'm not sure about this. I'll make sure, and I'll do a little bit of homework on the Euro Stoxx index. But I think a lot of the Euro Stoxx, a lot of that 50 in the Euro Stoxx index is mostly in Germany. Huge manufacturing giants. All right. So right now, that's the fear. That's why the euro is so low. The reason why the euro was much higher than the dollar in previous years was because Germany, which is the powerhouse of the Eurozone economy, they had a huge budget surplus from all the exporting that they do. Well, if their industries have to close down, or if there's fuel rationing, then will they be able to produce and export as much? And then if they can't, well, how does that justify a stronger euro? And that's why we're seeing, the euro, coming down below parity. And so the DAX, again, if we see a rally, I don't know if we do or not, I have no idea, but I am going to wait for bigger levels. Okay. The small stuff, you guys can go ahead and do that. I have my plan within the US indices. And then also too, in my FEZ plan, I'm still waiting for the Euro Stoxx index by correlation, the DAX, to get to higher levels. I think when the Euro Stoxx index gets to that level, we'll probably be at 13,700, maybe 13,900 up to 14,000 or so right here in the DAX. And I think if our liquidity data still remains weak, that would be a very good short to take. All right. Some of the other ETFs that I'm looking at, GREK. It's hard to find. GREK. Yes, this is the Greek ETF. Greece is, high debt. It's not probably. I mean, this also has a very, very bad options market, so I might not enter this one. This one is a little bit. That one is a little sparse, but Greece is also, another economy that's not going to do well if Europe really has to tighten its interest rates and raise interest rates by a large amount. If they get more and more hawkish, not good for Greece. Okay. Italy, I forgot, is Italy EWT? No, EWI, yeah. Italy, also, the spread between the German Bund and the Italian bond is at the highest it's been. I saw some report about that. Again, if ECB tightens, that is not going to be very good for countries like Italy. Okay. We could see them plummeting faster. But again, I don't really want to enter this until we get. It feels like chasing at these levels. If we go short here, again, this options market kind of sparse. All right, EWP I think is Spain. Yeah, Spain also high debt. Although the winter will probably not be so bad for them. They have milder winters. We'll see. But again, if that goes up, does this have a decent options market? No. It did. Some of these had actually some decent activity like a couple months ago. I remember EWP did. Spain did. There was a huge put trades. And I remember I covered this in one of the high noon highlights. There was some like a couple thousand contracts, when usually there's like not that many. Somebody made out with a lot of money on that. EEM, I mean, again, EEM is mostly Asia, though. Unfortunately, I don't know why it's mostly East Asian countries. If you want to try to get a little bit more other country exposure, then you're going to have to get more country specific, at least here in the United States. Some of you guys around the globe may have another way of doing this. If you do, let me know. Okay. Join the Discord, let me know, or put it in the comment section. Okay. But Turkey, I think, is my favorite one. But I want higher. Okay. Hopefully that answers some of you guys' questions. I know some of you wanted to see some of that. Oh, TSM. Congratulations on those shorts. Woof. Look at that. My goodness. That's probably what's taking down Taiwan, right? Let's take a look. Yep. Oh. EWT, though, is not so bad. Only 1%. The TSM is at 5. Okay. The whole chip space is coming down. So I don't think it's just like a Taiwan thing. I think it's, well, the Taiwanese economy is very much tied to the semiconductor manufacturing industry. So as you can see, actually it looks very much, it looks very much like the TSM chart, right? And this is the semiconductor index. SMH is the Van Eck semiconductor ETF that you could play if you want to play options. I mean, oh wow. I mean, if it gets up to here, let's not be greedy. Okay, so 240, around 240 zone. That looks like a wonderful short. Actually, I might use that. I might do this. If the indexes go up, so okay, so maybe if SPY or if ES, if this S&P 500 gets to 4125, if the semiconductor ETF gets to 240 around that zone, that looks like a wonderful short. It's not bad. I mean, the position I would have would not be that big. I mean, right now, it doesn't make sense to even look at it because probably the implied volatility on those options is going to be very different. But the skew looks nice. I mean, initially, the skew, you're going to get a nice skew on this. So put verticals are have a advantage here with the skew. That looks like a good short candidate, SMH. Okay, I'm going to add that to my watch list. So, yeah, right here, 240 on down. That's my level. If we get here, liquidity data remains weak. Boom, there we go. All right. And guess what? Liquidity data is still relatively weak. All right. New York advanced decline. Oops. What just happened? Okay. New York advanced decline still coming down. All right. We have not gotten out of a bear market or a sustained bear market rally that lasts at least a couple of months. You know, that doesn't just stop in a week or two. That has not happened unless this curved up. All right. Above all these moving averages. Advanced decline. Oh, what's going on? Advanced decline, making lower lows. So again, a not good sign. Actually, the only good sign here is that the equal weighted S&P 500 has not made a lower low. So breadth wise, it's not as bad. And also too, corporate our junk bonds ADL, it's not coming down as fast. Okay, yesterday it was like practically flat, +1. Okay, practically flat. I mean, it was a bond market holiday, but corporate bonds still traded, but very much low volume. But still, it's kind of flattening out. It has not made a lower low yet. So we'll see. I mean, we'll see. We'll see. Okay, we will see. It is flattening out though. All right. I don't think ES has made a lower low, has it? Oh, not yet. Not yet. We'll see if it does or not. All right. Cryptos. You know what? These days, it doesn't even make sense to look at crypto options anymore because crypto option volumes are so light. There's no block trades right now. And I mean, there's some November and December. November and December options getting traded. Mostly it's retail. They're just piling in different bets. I don't think the options market means that much to crypto anymore. Until that OI starts going up again, I don't think it's worthwhile to even focus on the options market and Ethereum and Bitcoin anymore. But if that changes, I'll let you guys know. But nothing has really changed on my Ethereum or Bitcoin outlook. I'm still waiting for the bigger levels to make those larger purchases. Oh, one thing I did want to mention though is that green line. Remember that green line, this uptrend chart since the lows, the COVID lows that I drew? This was drawn months ago, by the way, months ago. Okay, I drew it here during around this time, around June. I drew it. All right. Anyway, it looks like it is a thing because it has back tested it towards it. It was within ticks at the end of September, and last night it actually touched it to the tick. All right, touched it to the tick, and then rebounded. Will it hold? I don't know. Will it hold or not? If it does, that makes it a very compelling level. If it doesn't hold, all right, maybe we finally see our ETH to gold ratio playing out at 0.55. And this is where I would go. Now, with the price of gold the way it is right now, I think the price of gold is what, 1,700? Around 1,700 or so? Maybe a little bit lower, 1678. That would imply about a $900 per ETH price at 0.55 with today's gold price. Possible if it undercuts everything and then it just keeps going down. If everything sells off faster, let's say S&P 500 drops down to 3,400, does that undercut that we talked about for months? If that happens, yeah, it could. Okay. It definitely could happen. All right. Right now, the options market is positioned for something like that. It could happen. Right now, there is on the SPX option chain, there's a lot of options here and here. Okay, lots of hedgers here and here. So I wouldn't doubt if a lot of these institutions are hedging just in case if something happens, maybe bad CPI report, whatever, and they're ready to cash in those hedges and buy here. Wouldn't be surprised. All right. So again, my plan is to buy shares here. And then when we get the Moab signal, when we get everything, you know, curling up in New York, high, low, everything, that's when I'm going to start legging into some in the money calls, some leaps on an SPY. Okay. All right. No. Okay. Whoa. Somebody said long turkey. No, it does not mean long turkey. Okay. No. Just because I think it may go up to that point and that's where I'm willing to take a short does not mean it's going to go there. All right. It just means that's where risk management becomes favorable on a position down. Okay. It does not mean long to 45. No. Okay. No. I am not longing turkey. That is suicide. I mean, you're free to do whatever you wish, but I like my sleep at night. So no. Any other questions? Anything else you guys want to look at? All right, then. In that case, we'll wrap this up. Links are in the description. Come join our Discord. Our Discord invitation is down there. No sub fees, no paywalls. Of the people, by the people, for the people. If you enjoyed our video, hit like, follow, subscribe, comment, show us some love. All right, guys. I'll see you guys tomorrow.